Hey Suffield, what's happening in the housing market? You've got questions, I've got answers. Here's your September housing market update. There are currently 16 homes for sale in Suffield with 40 homes currently under contract. 18 homes were sold in August, and that's actually down from 27 homes in August of 2021. And 5 homes either expired, canceled, withdrew, or were taken temporarily off the market. Now, of those 18 sold, their average days on market were 17 days, and that's up from 13 days in 2021. The median sale price in August was $496,500, and that's up from the median sale price of $404,750 in August of 2021. All right, now let's quickly talk inventory levels. The current month's inventory in Suffield is 0.77 months inventory. That's crazy low. So let me explain how that works. 6 months inventory is considered a balanced market. Anything more than 6 months is a buyer's market, and anything less than 6 months is a seller's market. So we are at 0.77 months. That's wildly low. All right, so what are these numbers telling us? Well, first, it's still absolutely a seller's market. With inventory levels so low, even though they're on the rise from this time last year, they're actually still below the national average. Listen, we still have an inventory problem. Why? Well, that could be a whole other video. But 2 of the major factors that were even here pre-pandemic is that new construction isn't keeping up, and the millennials are actually at that prime age to start entering the real estate market. We need more houses to sell. The numbers are also telling us that home prices are still on the rise. Now, I get how that could be a little confusing because, if you're watching anything on the market, you're starting to see more price reductions. So that could be a little confusing. So let's talk vocabulary for a moment. So appreciation are when home prices increase, and depreciation are when home prices decrease. Deceleration is when home prices continue to appreciate, but at a slower or more moderate rate, a more normalized rate. All of the experts agree that what we're seeing is not depreciation, we're seeing deceleration. This means home prices are still appreciating, but just not at the same rate that we were seeing last year. CoreLogic stated that actually last year we were seeing home appreciation upwards of 15%. And earlier this year, we were seeing home appreciation up around the 20% mark. But experts agree by the end of the year, we're gonna see home appreciation around 10 to 11%. Check out this graph from CoreLogic to tell the story of how homes are decelerating, but not depreciating throughout this year. As the bars show, home prices appreciated between 19 to 20% year over year from January to March. But over the last few months, the pace of that appreciation has decelerated to 18%. This means price growth is still climbing compared to last year, but at a slower rate. So what's with all the price reductions? Well, before, when appreciation was happening at such a rapid rate, listing prices were continuing to rise. But now that appreciation has decelerated, or appreciation is happening at a more normalized rate, listing your house right is more important than ever, or he may have to adjust downward. So what are the key takeaways? Home prices are still on the rise, but may take a little longer to sell. We need more houses to sell. And appreciation is still on the rise, but just at a more normalized rate. So pricing your house right matters. Have questions or curious how these numbers apply to your home? Let's connect. Thanks for your likes, shares, and comments. And if you found this information useful, hit that subscribe button below. All right, that's your September Suffield housing market update. See you next month.